Another Israeli firm may have developed tools for spying on iPhones. Last year, it was revealed that NSO Group had created a system for hacking into the smartphones. Now, Reuters sources say rival Quadream also exploited the same flaw in the Apple handsets. Experts analysing intrusions engineered by the two firms say they both used a software exploit known as forced entry. That gives a hacker access to the phone's data using vulnerabilities in the software. In this case, they used a flaw in Apple's messaging system to plant malicious software. The firm's tools are meant for use by governments, but there is widespread concern over how they are used and by whom. In one incident, the NSO tool was used to spy on US diplomats in Uganda. Journalists have also documented numerous cases of spyware being used to attack civil society figures. Apple last year sued NSO, saying it had violated user terms. The Israeli firm denies wrongdoing, and the case is in its early stages. An Apple spokesperson wouldn't say how it planned to respond to the new report, while Quadream didn't reply to requests for comment. But cybersecurity experts say it raises real doubts over just how secure anyone's phone really is. Shell ended 2021 on a high note. The energy firm saw fourth quarter profits hit their highest in 8 years. Earnings rose by 55% from the previous quarter to $6.4 billion, well beyond analysts' projections. The numbers were fueled by higher prices and a strong gas trading performance. Natural gas and electricity prices have soared around the world due to tight supplies and higher demand as economies gradually recover from the health crisis. CEO Ben van Beurden called it a momentous year for Shell. He also said the company would step in to help supply Europe with gas in case of disruption to supplies from Russia. The strong results show a dramatic recovery for Shell and the oil and gas sector. A year before, in 2020, energy demand and prices collapsed due to the health crisis. Shell also said it planned to raise its dividend by 4% in the first quarter of this year, and the company announced it will buy back $8.5 billion worth of shares in the first half. The update comes after US rival ExxonMobil also reported its largest profits in 7 years earlier this week. Shell stocks were up just over 1% in early trade.
Stocks plummeted on Thursday after a dismal outlook from Facebook owner Meta Platforms not only took down its own shares but also rattled the entire stock market, abruptly ending a short-lived recovery built on upbeat earnings from big tech companies. The Dow fell nearly 1.5% and the S&P dropped almost 2.5%, while the tech-laden Nasdaq lost a monster 3.74%, the index's worst day since September 2020. Palumbo Wealth Management's chief investment officer Philip Palumbo said investors were already unnerved by the Federal Reserve and its plans to raise interest rates.
The market is very fragile right now. So any type of pull forward earnings or any type of negative earnings with some of the bigger companies or quality technology companies, you're going to see volatility continue to ramp up. The volatility we are experiencing is all due to the uncertainty around the Federal Reserve. And all of a sudden, when you have a major company like Meta and also PayPal yesterday produced poor earnings, that just creates another level of uncertainty for the market. So until we get some clarity on what the Federal Reserve is going to do in 2022 to tame inflation, this volatility will continue to persist.
Meta shares sank more than 26% by Thursday's close, a loss of $238 billion, the worst single-day wipeout in market value for a U.S. company in history. Other social media companies took a beating, including Twitter, which fell 5.5%, and no FANG stock was spared in Thursday's rout. Despite posting stellar results on Tuesday, Google parent Alphabet fell more than 3.5%, Apple fell more than 1.5%, and Netflix lost 5.5%. But shares of Amazon reversed course in after-hours trading following the release of its results, which beat profit expectations. Same story for Pinterest and Snap, both of which plunged in regular trading, only to soar after hours on strong quarterly results. Facebook owner Meta Platforms found itself in an alternate reality Thursday, as shares of the company fell as much as 26%, dragging down the entire U.S. stock market and spilling over into Europe, where tech stocks posted some of the steepest declines and sent a ripple effect across global financial markets. Meta was set to lose a fifth of its market value, erasing more than $200 billion, which would shave off nearly a full percent from the NASDAQ Composite Index's market value and about 0.5% from the S&P 500. The huge drop followed a dismal forecast from Meta, which blamed Apple's privacy changes and increased competition from rivals like TikTok. The company formerly known as Facebook also reported a decline in daily active users from the previous quarter for the first time ever.
Facebook was an unmitigated disaster.
Wedbush Securities Managing Director Daniel Ives.
I think Facebook has a Mount Everest-like battle, an uphill climb to get back to growth. Because what we're seeing on the digital advertising side, the privacy issues, TikTok competition, this is a company, they changed their name, but the strategy and the monetization continues to be social media. And this was the dark days in terms of what we saw from the quarter.
The so-called FANG stocks, including Facebook, Amazon, Apple, Netflix, and Google's Alphabet, has seen around $400 billion in market value disappear in the opening weeks of this year, as investors expect policy tightening from the Federal Reserve to erode the industry's sky-high valuations. The disappointment over Meta's earnings and subsequent stock drop called to mind the bursting tech bubble of 2000. If Thursday's losses hold, the decline would mark the social media giant's worst one-day loss since it went public in 2012.
Gabby Iannello didn't have a job lined up when she quit her job in real estate development early last year, wanting more time with family and looking to avoid burnout. She moved back in with her parents on Long Island, and now she produces a podcast and website called The Corporate Quitter. She says she has no regrets.
Absolutely not. Best decision ever. There are times where things are stressful and challenging, but I've dealt with more stressful things in my corporate job when I was there, so there's nothing I can't handle.
And Iannello has plenty of company. Nearly 4 million Americans on average quit their job each month last year, an unprecedented wave of workplace turnover as the economy emerged from the pandemic-induced recession. Job openings are near historically high levels as companies seek to rebuild staff or pivot in response to changes in consumer demand. As of December, there were nearly 2 openings for every unemployed person, according to the Labor Department. That means many workers are finding themselves with options and taking them. Nick Bunker is head of research at job listings website Indeed.
What we continue to see is near historic levels of people leaving their jobs. But what seems to be happening is that people are leaving their old jobs and starting new jobs. That's part of the reason why we've seen such strong wage gains in 2021, was that people are getting new jobs at higher wages, which is powering wage growth higher and higher.
That's leading some economists to say the trend dubbed the Great Resignation is more of a great reshuffling as people move into jobs with better pay, more flexibility, or to try something new. Gianfranco Sorrentino, the owner of 3 Italian restaurants in Manhattan, is experiencing that firsthand. He bumped up the pay but says he's still struggling to fill jobs.
We've been increasing our minimum wage. The minimum wage in New York should be $15 an hour. We pay $18 an hour for the first jobs like a porter and dishwasher. We increased all the salary of our management, and we increased about 15–20%. It's still this benefit, they didn't help at all. I mean, we didn't see any increase in the demand of job.
Not all people who quit are moving to better jobs. Economists say some people are struggling to work because of ongoing disruptions with childcare, and others have had to quit because they don't have paid sick time. Still others are rethinking what they do and how they spend their time. For Gabby Iannello, overcoming her fear was the hardest part.
I was so fearful of quitting, right, because of the money, because of the judgment, because of all those things. But what I recognized was that if I continued to go down the path that I was currently going on, not only would I end up in the same shoes of my higher ups, which, some of the people I was looking up to, I wasn't really aspiring to be, like they weren't presenting the characteristics or the lifestyle that I wanted. But it just dawned on me, we live on this world, this earth, for about anywhere from 60 to 100 years, depending on how we take care of ourselves. And so I'd rather spend, 2 or 3 years kind of struggling, right? Maybe being a little broke while I find that business, while I find that new venture, because then I'm giving myself the opportunity to kind of do what it is that lights me up for the rest of my life.